Bum, 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 bum. Hi, I'm going to show you how to filter some trades, just very quick. Roll the intro and find out. Hi, welcome to the channel. If you haven't been here before, my name is Langers, and as you can see, I definitely am the scruffy trader. But I might have rugged good looks, but I'm certainly no Brad Pitt. But I am a good trader. And I kind of show that constantly, because what I'm trying to do is put trading in the real world. Too many fake stuff, the good old green Lamborghini.
You ding dong!
Oh, make it stop!
Sorry guys, I had to get one in. And it's false. And it really does wind me up. As does a number of things, because you'll often find a rant on this channel. And if you've got delicate ears, strap yourself in, because Langers will be off on one. It's normally driven by trolls having a go at me, because they've got no concept of the real world. So why do I say the real world? Because as you've just seen with that ridiculous picture, that's the way the industry is portrayed. And it's always portrayed as get rich quick, and you are going to be a multi-millionaire within a couple of months. It's bollocks, absolute rubbish. So I'm setting out to disprove that and hopefully help some people along the way by inspiring your own trading. And I say your own trading because trading is incredibly individual. Everybody looks at the charts in different ways. And that's what moves the market. Because what you see is not what I see. You know, because you might want to buy it, I might want to sell it, and that's the fluctuation that you see. Watered down version, but that's essentially what the markets do. So, how do you filter that out? Well, that's what I want to show you today. Just a simple way to filter out good trade from bad, so that you have a chance of surviving in this industry. But the first thing that you need to do is understand that it is a job. And this is my job. It's how I get paid. You know, wasn't born with a silver spoon in my mouth. I put a lot of time and effort into my education, as you would in any profession. And now it pays me. And that's what I'm hoping to inspire. If you've clicked onto the channel and you think you're going to be the Wolf of Wall Street in a week because it's portrayed that you press a couple of buttons, then this channel isn't for you, because it is the real world, and trading is not for you either, because it's a hard industry to crack. And I said Brad Pitt earlier on, you know, think of it as Hollywood. How many actors actually make it to the big leagues? Not many. But there are a lot of actors make a good living by being extras. And that's what I am. I am an extra. You know, with the odd speaking line, if you want to put it that way. Because that's what trading is. One of the sayings I often say is, don't look for the big swings or swing for the fences. Just look for the crumbs the big boys leave behind and you'll be fed. And I truly mean that. And it does work. And I prove it time and time. For all I get it kicked into me all the time, I'd put up live trades more than anybody I have seen on YouTube, and not one of them matches my performance. And I know that sounds big-headed, but it's just something I wanted to show, that it can be consistent, because I very rarely have a red day. You know, I have plenty of losing trades, but I know how to manage those trades, and I know how to manage my day, because it's a job. So with all of that gone, I'm old, you see, so I have a tendency to give a little bit of words of wisdom from my years, because, like I say, I am old, drink way too much coffee, because we all know Scruffy likes a coffee. But I'm just trying to emphasise how difficult this is. You know, I am pretty much tired of seeing a lot of the other channels. I was watching one today and it was ridiculous, absolutely stupid. You know, I've got no idea what his accent is. It was some Mexican Argentinian mixed with Italian, ringing a bell, going, absolutely yes, arriba. And he's trying to tell you you're going to be on a full-time wage with £200 in less than a week. I'll catch that up in some rant some other time, but I saw it today and it was just like, my God, how do people fall for this?
Personally, I think you're a fucking idiot.
Anyway, that's an expectation that's a little bit high and a story for another day. So what I want to do today is jump on the screen and just show you a quick, easy way to filter trades. So come with me and I'll jump on the screen. Okay guys, now I've had a little bit of a ramble and enjoyed the coffee. I'm going to pull up a screen and we're going to have a little bit of a look at filters. Now there's a big difference between filters and triggers. A filter just tells you when it's time to look for a trade and when to stay out of the trade. The trigger is what you use to enter a trade. So there is a difference, and it's a big difference. So what I'm going to show you is only a filter. It's only to show you when it's time to look for a trade or to stay out of a trade. Okay? It's not to be used to enter. So we'll pull up the FTSE, because it's been in the news quite a bit recently. FTSE 100. Put it onto the normal. There you go. This is how most of you guys will open up a chart each morning. You'll go on your 15-minute or your 5, whatever your chosen day trading chart is, and you go, right, amazing. Look at that. That's in an uptrend. I'm going to buy. But is it? Is it really in an uptrend? Because that doesn't really tell you a lot, you know, because it's a short snapshot of data. I mean, this just goes back to yesterday morning. All right, so to me, that's not enough. And you'll often hear me talk about looking at higher time frames, power of 3, and all of this, and it is because I essentially will look at 2 higher time frames and then trade 1 lower time frame, and it helps me guide. And in that process, I am constantly filtering out markets and signals, and this is a way it can be done. So straight away, you're looking at that and you're thinking, yes, uptrend, I'm going long. Well, the first thing I would do is look at the bigger picture. So I will go out to the 4-hour and I would start here for intraday. Now that tells me something completely different, because that's pretty much sideways. Yes, there's some big moves here. That isn't coming down, but that's just not going anywhere at all. All right. And again, it's not really telling me a lot, because for all that's going back now to the 11th of May, markets breathe, but a breathe in and a breathe out can take a long period of time. There's the 14th to the 19th. So that breathe out took 5 days, you know, so that's one breathe and then I had a short breath in. So I need a little bit more information. So I'll scroll that chart out. 1, 2, 3. Oh, 3. 3 times. Now it's telling me something completely different, you know, because it's showing me this, it's showing me that, it's showing me. Still not really ranging, it's not going anywhere. But that's just my visual look at it. Now there's a way you can tell whether it's in a trend or a range very quickly. And it's your first filter. And it's something as simple is a moving average. And if you put a moving average of 200 onto a chart, it's a standard moving average. It's looked at by everybody, and it is a good barometer. And if you don't know what a moving average is, it'll be the average of 200 candles in this case. Okay. And as you can see, and again, it's visual, it's pretty much flat. So that tells me I was right in my visual look at this. This thing is ranging. So what's that got to do with the price of bread, Scruff? That tells you a lot. Because it tells me that if I was going to be using a moving average crossover system, this market is useless for it. Because in that situation, it would ripsaw constantly. Now, moving averages are good, but only in the right conditions. And the only time they work well is if you're in a trend. So how do I know if it's in a trend? Well, scroll it back and have a look. Same situation, quick eyeball, bending down. In a trend. Yeah, but how do I know it's in a trend? Well, let's have a look. That is February. And that started coming out of it around here in March. So for a month and a half, that was in a trend. You would see that, even if it was here, you would see that that's bending down and you've had all of that time to work it out. Simple. And then all you do to reinforce that is drop another moving average on. Let's change the color. A 50, 55, if you want to keep it in a Fibonacci number. And there you go. That tells you it's in a trend. That confirms the trend. And as long as the price is underneath, there's your filter. You are only going short. When that price goes between these two, you start thinking, is this over? And as you saw, as it goes across, yes, it is. All right. So that is one quick filter in a trending environment. Okay. But what if we're not in a trending environment and we are here? And that kind of says, see how it's ripsawing about? Cut your ribbons, that. Absolutely cut you to ribbons. So now we've decided that this is a range bound market for the time being. We need to put some parameters in that tells us that it's staying in a range bound market. And first thing I would do is box the price. There's a high. There's the low. I've now just boxed the price. As long as the price stays between those two lines, I am going to assume that this is in a range. If it breaks, I'll reanalyze and see what's going on, and I'll keep an eye on the 200 to see if it's bending down, all that sort of stuff, just to keep an eye shut. But in the meantime, that is my trading range. But that isn't enough. I now need to know how to filter out this, so I can make some money from it. There's many ways you can do it. And I find that once it's in a range, you use the oscillator family. And my chosen oscillator is an RSI, but you can use any, CCI, stochastic, whatever. But I'll stick to what I know, which is an RSI. And you have it right here. And it's now as simple as it gets. Standard RSI in a range bound market can be your best friend. Now you can change it up, you can speed it up, slow it down, do all sorts of different things, but this is just a filter for me. Okay, so how I filter is this. I just mix it up a little bit. It's twofold. First thing I do is I understand that is the range. So I break the range in half, simple measuring tool, up to the top. That's the halfway point, and I will draw a dotted line in, like so. I now know that if it's in the bottom half, it's going to try and get up to here, and if it's in the top half, it's going to try and get to here. So that's my first filter. You know, bottom half, it's going up, top half, it's going down. All right. Then I need to reaffirm that, and that's where the RSI comes in. But on its standard settings, it doesn't really help me for the way that I look at things. You know, there's nothing wrong with the standard settings. They were put into place for a very good reason. But for me, I need to change it. So all I do, I slow it down, and I work on the 50 line, just like so. Okay, just changes the parameters a little bit. Okay, now what it's doing is telling me a green light and a red light. If it's green, it's going up. If it's red, it's going down. And I also need to know when to get out, or when to stop using it, rather. So you just put back in your lines, just make them solid, so you can see. I change it down slightly because with it being slowed down, I need to slow the lines down as well. And this will become apparent in just a second. So instead of 70 and 30, it's 65 and 35. Okay. Now we're looking at this. This is a decent amount of time. So that's from the 16th of April till now, 22nd of May. So it's a little over a month. And let's see what this filter's given me. So, first signal that we're coming to, or first filter rather, is here. Looking at the cross of this, I would wake up on the morning of Wednesday the 22nd at 8 o'clock. Look at that. It is green. I am only going long that day. It's in the bottom section, so I know it can only go up. That is it. I will then go on to my trigger chart, and I will trade long only. And I will do that till this exhausts. And how do I know it exhausts? Twofold again. If it breaches this section or gets up into here, I know there's a high probability of a reversal because those lines have been put into place at key turning points. All right. And as you can see, boom, down it came. All right. So that will be the first one. If it's up there, I ain't trading, or if I'm in a trade, I'm looking to get out of it. All right. And the secondary one is here. And this is why you put these lines in. That line, once it breaches it, I am looking to get out, and I'm not going to trade. So if I haven't got a trade on and the green is above that line, I ain't trading. If I am in a trade, I am now looking to get out. And that can be whatever your chosen way of getting out the trade is. Candle pattern, stochastic, whatever it happens to be. But it catches it. So now I'm sitting on my hands thinking I have to wait for another trade. And it's there. All right. And it just say catches it. But it does catch it. Started in the top section. So you've got all of this to worry about. All right. And you just constantly repeat the process. As it comes down, you're out, changes over. And you've just got to be a bit box clever, guys, and think about what you're doing. You know, because like I say, these are not triggers. They are just filters. And you're using your eyes shut all the time. So this is a good example. I mean, I use real world examples all the time. I don't scroll it back. This is the current chart because today is the 23rd and there we go. Saturday today. So this is current chart. If I'm looking at this and I'm seeing that curl up, I know that it's probably going to go green, so I'm ready. And that's what I'm looking for. Soon as it goes green, and it's in this area, I know it's time to go. So sitting on my hands saves me a lot of stress and a lot of hassle. And it stops me trying to catch every move because you can't. Overtrading will kill your account. Okay. So there we go. You know, you'll have caught all of that down. You're sitting waiting for this to go green. There it is there. It's in the bottom section, ready to go up. You will catch best part of that move. Comes around again. Goes red here. So it'll be this area that you'll be looking to get in. And you catch all of that. And then again, turns round. You're waiting for it to go the opposite direction. There's the green, still on the other side. There's your move. Trying to catch tops and bottoms is dangerous. It's very difficult. But if you can get the third in the middle, it'll pay you. All right. And that's what these are for. So that's 2 easy filters. Play with it. Hopefully you can add it into your little toolbox and sort of cut out some bad trades. And that's the whole idea of it. It is just to cut out bad trades. And if you miss a big drop like that, don't worry about it. You know, if you haven't traded it, you've never had it. And if I'm not on the trade, it means I'm not losing money, I'm not gaining money. So why cry about it? You know, cry about the trades that you get in and make a mistake on. If you miss a trade, no big deal. They're just like trains. You know, there'll be another one coming in the station soon. Just get on that one. You'll be fine. But don't try and catch a moving train because it'll rip your arm off. So, there you go. Simple as that. So I'm going to leave it there, guys. See if you can fit it into your trading style. And if you're the first time here and you like this content, please subscribe to the channel. Genuinely helps me. And remember, do what you love, money will follow. See you all in the next one.